Thank you so much, Jamie, for joining us. What are you expecting to hear from this company?
Good morning, and thanks for having me. After last quarter, we expect another beat, but probably a cautious guide. They have to reinvest in affordability, which is what they said on the June call. So, we expect to hear a lot more about them testing the value propositions at places like Olive Garden. We think that could be a source of same-store sale uplift. And they've revamped the menu there, so they're offering lighter portions. But overall, we think the company is stronger after COVID, and we're looking forward to the report.
Yeah, just got to clarify my mistake. It was actually going to be reporting tomorrow rather than this afternoon. I'm just wondering, you mentioned potential for cautious guidance. Jamie, we've seen that that's been punished throughout the course of the earnings season. What do you expect to see as far as the reaction in the stock?
Yeah, it has been punished, but it's Darden is performing relative to the rest of the industry. QSR, the quick service space, the McDonald's, the Burger Kings of the world, they're not performing, and it's really because consumers have changed their perception of value. People trade down, but they also trade up, and that's what we're seeing here with Darden. So, our expectations are for the stock to certainly swing on the earnings and, more importantly, the guide. But we think the management being cautious is the appropriate move here, and certainly sets up for more beats down the road.
Okay, I mean, prudence has been punished, but I suppose if you do have a lack of visibility, it's important to be upfront about it. Certainly, I'm just wondering, given that this is sort of the tail end of the earnings season, or what you've sort of taken away from what we've heard from other companies as far as some of those consumer trends. We certainly have seen a bifurcated sort of consumer sector right now as far as what some of these companies have been talking about, and just wondering, how you see the retail sales, for instance, which came in hot the other day. I mean, just as far as the psyche is concerned as to, how consumers are going out and spending their money.
Yeah, there's an absolute bifurcation of the consumer, and the high earners are continuing to spend. The boomers, the nest eggs are going up, the baby boomers, and so we expect that to continue. Retail sales, we expect to be continue to be relatively muted, but continue to stay positive. It's a very interesting economy right now, and it's quite frankly one of the most difficult investing times. But we really think that, we're going to keep chugging along here. And, certainly the incumbents and the large players are winning, the Walmarts of the world. And, Darden is one of those.
Oh, yeah, for sure. I mean, I'm just looking at the performance of the stock. I mean, year to date, it's pretty much neck and neck with the S&P 500. I mean, where do you think things go from here?
We think from a valuation perspective, the numbers are pretty much in line with historical averages. Price to sales is a little bit high, but when you look at that on a relative basis, the relative price to sale, it's really not. It's pretty much about average. So we expect that if the company continues to relatively outperform, that it can, re-rate a little bit higher. Certainly, it should trade at a premium to, competitors and those in the QSR space, which is really not right now.
Okay, awesome stuff. A good look at Darden ahead of those earnings coming out tomorrow. Jamie Meyers, thank you so much. Appreciate your time. That was the analyst from Tangler Investments. All right, let's trade it now with Tom White, host of Fast Market. Good morning to you, Tom. How would you set up an example trade for Darden ahead of earnings?
Hey, Sam. Yeah, implied volatility levels are pretty elevated going into this report. The option market's pricing in about a plus or minus $11 move in the shares, and that's a one-day move. It's about 5% either way. So expectations pretty elevated going into this. It's still only about 8% off of its all-time highs that we saw a couple months ago, about $228. So I looked at growth rates are supposed to be okay on this one, but that high implied volatility gives you some opportunities. I looked at a neutral strategy. If you just wanted to take advantage of that vol collapse that we're going to see tomorrow post-report, and then also that it remains in a range-bound type of situation here. So going out to the September 19th monthly options cycle. So just 2 days to expiration, really short-term positioning. We're going to sell an iron condor with the same common middle strike. So it's a short and iron butterfly basically, but I skewed it a little bit where I've got more risk to the upside than I do to the downside. But let's break this one down. You're going to sell the 210 strike call and the 210 strike put. So you're selling a straddle there. And then to offset risks and make it risk defying, we're going to buy the out of the money 195 strike put, and then we're going to buy the out of the money 230 strike call. So the wings on the downside are going to be $15 wide, $20 wide on the wing on the upside. You're going to collect roughly a credit of about $10 on this spread. That's going to be what your max potential profitability is, with the apex of profitability being at or near that 210 strike where you sold the call and the put. Now, your break evens where you start to lose money are $200 to the downside, so you want it to remain above there, and then $220 to the upside, so you want it to remain below there. And what you'll see is time decay works in your favor, so positive theta contracts the price of this, and then also that vol crush that we're expecting tomorrow. But the key with this type of strategy, you're selling into a high volatility environment with the expectations that, hey, it's going to remain between 200 and 220 over the next 2 days into expiration. Then you get to buy it back cheaper.
Good stuff. Okay, a great look at Darden there ahead of those earnings and an example trade from Tom White. Really appreciate it.